Closing beat, everybody. Happy Thursday. Feels like a weekend, but it's not. It's just a couple days off there. Hope you had a great holiday, couple days there. Great Christmas and everything. And you're all fully stuffed, ready to get back to work here and talk about the stock markets. This is a quick stock market update show that we do. We call it the Closing Beat because it references jazz. So closing beat, it's like jazz, because we're Jazz Wealth here. Hope you keep us in mind. If you have IRAs, rollovers, things like that, and you want to give us a shot, I appreciate it. Check us out at jazzwealth.com. All right, we're going to talk about the stock market today. Before I do that, we're playing a game also. If you want to play with us, you go to jazzwealth.com/guess the Dow. You can take a guess of where you think the Dow will close next week, also a holiday shortened week because of New Year's. And if you're the closest without going over, like our winner this week, Bruce, will send you a $100 gift card. Now, our winner this week, Bruce, was one of our customers, and so we credit his account $100. We could do the same for you if you happen to be a customer here at Jazz Wealth. Feel free to play along. Next week, there'll be no show on the 31st or the 1st. The market's on the 31st. It'll be a half day, and then Wednesday, the stock market is closed. So no closing beat then, but we'll be here tomorrow, so we'll keep going. We'll follow this market. This market continues higher. If you like a higher market, then you're happy. The Dow was higher by 105 today. 16 on the S&P, and the NASDAQ 69. You'll notice it also traded above 9,000. That's the NASDAQ composite that you see on the right-hand side of your screen. Above 9,000, and normally that wouldn't grab a whole lot of attention, but because there wasn't a whole lot to talk about today, that's what you see. So here's the S&P on the charts there. Back to new highs. Obviously just very strong, looking good here. Interestingly, just before I started here, I put this little trend line. I extended it out for you just to show you the sort of the easy way to just see, okay, we're in an uptrend here. You draw a simple line. And just for fun, we said, well, how far is it from the high to this trend line, assuming we just fell right back down to it? It's 10%. Isn't that kind of funny? So if the market fell 10%, which even Vanguard says 50-50 shot that it happens next year, I happen to think it's a little higher. But the market, if the market fell, that would be a full 10%, and we'd still be in an uptrend. The markets would still be, a little scary in the short term, but still looking pretty good. So the S&P, nonetheless, looking really good right now. Here's the NASDAQ 100 that we're looking at. Also at new highs, looking good. Great day for tech stocks, and the Dow hitting new highs as well. It was a low volume day today, as kind of expected. Tomorrow will be the same, low volume. NASDAQ going over 9,000. If by some reason tomorrow, Monday, and Tuesday of next week, we're able to gain a total of 0.8%, which at this pace should be no problem. If that happens to happen, then the S&P would actually show a gain of 30% or more by the end of the year. Now, the NASDAQ's already up 36% for the year, so, obviously NASDAQ's winning, but the S&P, if it wants to put a 3 in front of its performance for the year, it has to gain 0.8% for the rest of the year, and like I said, there's a good chance maybe that happens. In the news today, you got a lot of the holiday sales news come out. Amazon in particular, we'll cover that in a minute. But a lot of the retailers had their chance to say, hey, you know what? The registers rang. Everything looked good. We had a great holiday season. So you saw a lot of that out of the individual names today. You had initial jobless claims come out. That's a weekly number we always talk about. That was basically as expected. So from an economic standpoint, people are going, hey, the economy's good. We're out there shopping. All right, maybe the reason market's moving higher. Or that's the reason for it. You also had Treasury Secretary Steve Mnuchin come out today and say, hey, that phase 1 trade deal, you ought to be seeing that soon, at least the guts of it, sort of the details. Nobody's really expecting anything like, unexpected or anything. But they said that was coming out. And then overnight, while we were closed, China said that they're in constant contact with the U.S. Trade representatives on a trade deal. So they're saying positive things. We've obviously got positive things going on here, and so that's all good. The only other economic news that came out today was mortgage applications. That was actually down a touch, but that's kind of coinciding with new home sales, pending home sales, and all that stuff that we've been talking about. Lower inventory out there, higher prices. People are just kind of saying, you know what, I'm going to wait this thing out. You also have seasonal effects, but the numbers adjusted for that anyway, so not really that big of a deal. It didn't really hurt the market, so it was kind of the takeaway from that. Let's go over to the sector breakdown here today. You got banks. We'll use the XLF. Had a great day today, 0.5%. Remember, if you want the S&P to move higher, you need the banks to move higher, and you need tech to move higher. Well, tech did move higher today as well. Most expensive area of the market right there. If you like buying high-priced stuff from a valuation standpoint, there you go. You got your tech. So banks and tech did a great job today. Oil also got some attention. That's not oil. There's oil. Also got some attention moving back towards the higher end of this uptrend. We just drew some lines to make it really simple to see. You got a nice easy uptrend up there, and that's where it stopped today, at the top of that range. We've seen that before, actually just a couple days ago, where people sort of take a little bit of a break in the short term there, so not too bad. Remember gold? We were talking about gold last week, and we said, look, it's pinching. It's the nicest way I can say it. You got this pinching pattern, a series of equal highs there. You could see it hitting the top part of this line, and then an uptrend on the lower end of this sort of spectrum, and you have that pinch kind of forming. We talked about if it broke above or below, that's where you'd expect to see the next bit of excitement. Well, it broke to the upside. We covered it there on Monday. Broke to the upside really strong, and there you go. So there's a great little technical lesson for you. Commodities tend to trade in very technical ranges, right? So oil in particular, which we've highlighted there. But here's gold breaking out to these highs. So the last 2 days of the closing beats, Monday and last Friday, we sort of illustrated that to kind of really bring that concept home of the technical part of gold. So gold looked good, and if you look, gold mining stocks, they've done well here in the short term. Newmont was one we pointed out the other day, one of the stronger ones in the category. And then you can look over to silver. They've also had a good run here as well. If you want to look at, do I know that one? Yeah, we'll just use the ETF. So silver doing well here over the last couple days. Those metals, very, very strong. So pretty cool there. If you look at some of the different areas of the market there, consumer discretionary, you might imagine them being stronger today. It's kind of a sloppy breakout. If you were to just draw a line here, I don't know many people that would do this, but if you just kind of connect the dots here at these equal highs, you got a more confirmed breakout in consumer discretionary, which you can imagine with good holiday sales and everything, people happy about that. Communications services higher today. This is mainly made up of two of the FANG stocks, which we'll talk about in a minute, Facebook and Alphabet. They both did well today. So 0.75% higher on that one as well. I noticed healthcare didn't quite participate today. XLV will use to follow that, but it's had a good run. Right? So healthcare's done really well. Ever since Elizabeth Warren started sliding in the polls there, you've seen healthcare kind of take off. So if you follow the healthcare sector, didn't do a whole lot today, but overall looking pretty strong. And that's basically it. That's your sector update for the day. There's not a whole lot else to talk about. Everything pretty much did good. It was a decent day. Let's move on to some stocks here so we can get you back to your evening. Amazon was probably the bigger, most talked about name today. 4.5% gain on the day. I know this is good for a lot of you. You guys have been waiting on your Amazon to kind of pop up there. They were waiting for those retail sales. Mentioned this about a month ago, saying, well, I don't know. Amazon's dead. I don't have a good reason for it. Maybe they're just waiting for the holidays. Holidays obviously turned out really well for them. They're a lot of comments out of Amazon, but the ones that everybody focused on today, that the holiday sales generated billions of items ordered. Billions of items all around the world. And they said tens of millions of Amazon devices bought. Not really a lot of clarity on that number there, but hey, tens of millions times whatever their profit margin is, not very large, but that's good for Amazon. So 4.5% gain on the day, back above the 200-day moving average. Everybody happy with Amazon, one of your FANG names there. Another FANG stock, Amazon. I'm sorry, Apple. Why did I say Amazon? Apple hitting new highs today as well, up 2% on the day. It was basically higher with the rest of them. You look at Facebook. Facebook up 1.3% today. Google, there you go. Nice day, almost back to highs there. And then Netflix. Well, Netflix has done well recently, but it took the day off today. A little bit quiet. It's just a little bit extended. That one got a little pre-holiday boost there as well. Boeing in the news today. You got it down about a 1% today. Looking real weak here in the short term. The headline news, you might find something that says like, new documents sent to Congress reveal a disturbing situation. Well, what does that mean? Do we know this already, or is this brand new information? In the documents, it is only a report, by the way. We don't actually know what's in these documents. They have not released them. The congressional committee that's doing the oversight here, they haven't actually released the documents. But Bloomberg said, you know what, we've got a source. And that source said that in these documents, you've got direct comments from employees expressing concerns about safety regarding the 737 MAX. And others in Boeing's organization were asked to make sure that regulators did not get in the way of production. As far as the 737 there. Again, nothing's disclosed or anything. That was just a report out of Bloomberg, and that worked. Hurt the stock down 1% on the day. Speaking of being down, Peloton. I guess people didn't go buy bikes, man. Peloton down 6% on the day, back below the very new 50-day moving average. I wouldn't put too much emphasis on that just yet, but just falling apart here in the short term. Now down over 25% off of the recent highs there from the IPO. It's a new stock. You got to expect the volatility here. So if it's not for you, then you don't look around, man. Don't look at it. Peloton didn't have a good day. All right, you got 76.4% of the stocks above the 50-day moving average in the S&P. That's down. Remember, we were at 80, then 78.4, now 76.4, starting to slide a little bit lower. 29 new 52-week highs today. Let me see if I can pull this guy up here. I want to show this real quick. It's going to look like a mess. Hang with me here. It's just kind of a holiday day. We're flirting with some new things here. In the New York Stock Exchange, here is sort of a day-to-day list of stocks making new 52-week highs, at least over the the year. And so you can see today up at 245, well off the highs. I just wanted to find a visual way to illustrate to you guys that 29 new highs in the in the S&P 500, that's off the highs. We've seen some really strong numbers there. 81 days, 77 the other day. And so the stock's making new highs. It's starting to fade away just a little bit if that's something you like to follow. I'd love to have my own little chart of that, Charlie, if you're watching. All right, so Apple was one of them. You had the banks in the mix there. Citigroup is one of them, looking real strong here in the short term. JP Morgan, there you go. Up 1%, looking good there. All good, right? Royal Caribbean hit new 52-week highs again. Happened to be a stock that we own. Just excited to see that one take off. I'd be okay if it took a break. I mentioned that the other day. You also had some of the semiconductors, although they were on the weaker end of the list. You had AMD hit new 52-week highs today. Was bouncing back and forth between positive and negative all day. Same with Skyworks. It did finish up the day just a little bit positive, but that's basically all you have there. If I move on over to 52-week lows, nothing. There was nothing there today. And here's a sort of an inverse of the chart that I just showed you. These are the number of stocks in the New York Stock Exchange making new 52-week lows. You can see that number has been very, very low for some time. August, our last significant pullback in the market, which significant is sort of, I don't know, can you say that? It was like 6%. It wasn't that big of a pullback. But that was the last time we saw any spike closer to 100 per day. We're just hovering around here. Number of stocks in the S&P 500 that made new 52-week lows today? None. Zero. You got nothing there. Let's share something interesting with you here. Let's try something different. So, price of gas. You ever notice price of gas go up around Christmas time? Didn't go up this year. I mean, it was already higher, but it didn't go up this year around Christmas time. Typically, you see the price of gas start to spike. So it got us questioning some things. We looked up the retail price of gasoline over the last year. So here on the screen, you see January all the way until now. Here is the price of gas throughout the year. It's up 13% this year, and we wondered, okay, up 13% seems like a lot. Is that a lot compared to average, or is that average, or is it below average? Where are we at with gas prices here? And so here's what we got. We went back and looked as far back as I could go, last 15 years. So we looked at the average price of gasoline on Christmas Day, and then we compared it to the other years just to kind of show you. So you know I've got a geeky chart for you. Here you go. Here is all of each year, the price of gas on Christmas. So the middle column that you're looking at here is the actual price of gas on December 25th of every single year going back to 2005. What you'll notice is this year, the average price of gas on Christmas was $2.55. Seems low. I think we pay more here. I don't know. It seems like that's a little bit low. But anyways, the U.S. average price of gas for us retail consumers out there, $2.55, which if you notice over the last 15 years is 1 penny below average. So this whole argument, and it's a good argument, right? We spend a lot of money on gas. If you take the average household's income and you look and see how much they spend on gas, that's a significant number. It's not something to sort of sneeze at. So when gas prices go up, we tend to start focusing on the idea that that's going to pinch the consumer's wallet, their discretionary, disposable income, discretionary spending, etc. Nonetheless, gas prices sitting here just a penny below the average. So looking pretty good there. Now it's still up 13% this year, so it did see quite a sizable bounce to get back to the average. You could argue maybe mean reversion in there just a little bit, but that's basically where we're at. Overall, a gain of 13% on the year, but we're basically back to average in terms of gas prices for the Christmas holiday. That's what I have to offer today. I've got one more stat for you. You like these sort of things? Did you know today finished basically as it was supposed to? So the S&P 500 up 0.51% today. And if I could highlight something real quick, it floated right around the 0.35 area for the majority of the day. Oh, I typed in the wrong symbol. Hold on, hang with me. Here is the performance of the S&P throughout the day today. Now, at the end of the day, we had a little bit of a rally, right? That last sort of 15, 20 minutes or so, we got a little spike in the rally. But every little blip that you're seeing on the screen today represents 5 minutes of time period. So over here is the start of the day, and then we had a little rally in the morning and pretty much quiet throughout the afternoon, hovering around the 0.35% area throughout the day. Here's some stats for you. In the last 75 years, we went back a full 75 years, the odds of today being a positive day in the market is 78%. It's pretty high, right? December 26th has the highest probability of being positive going back 75 years. So if someone ever says, if you had to pick one day a year to invest and just try to trade, but you wanted the market to go higher, what's the best day to pick? December 26th, actually. That's today, right? So I wanted to share that with you. The average gain on December 26th is 0.37%. All day, we stayed average. Right at the end of the day, I don't know what happened right at the end of the day, but we got a little bit of a rally there right at the end of the day. These stats, I share the Fed stats with you all the time because you notice the markets do exactly what they're supposed to do on these days there. So I thought it was pretty interesting. Now, if you take every single day over the last 75 years, you go, what's the probability that the stock market is higher on any given day? Let's forget holidays. Let's forget the news for a minute. For the last 75 years, what's the odds that tomorrow and the next day and the next day are going to be positive? It's actually 53.07%. I don't know if you like that sort of thing, but that's it. The next best performing day I put down was November 24th, right? So the second best in terms of having the highest odds of being positive day, 75%, it's November 24th. So just thought I would share that with you. And that's pretty much all I have for you today. So I will take a moment, answer your questions if I can here. Let's see what we can do. Let me know what you think. I'll see if I can answer any of these questions. You're looking to buy a stock at a cheaper price. Would you agree selling a put might be the way to go? Yeah, why not? If you like the stock at a lower price and you don't mind if it falls down there and then you get the stock. See, the problem is most people, they go, stock's at 40, I'll sell a $35 put. That'd be sweet. If it doesn't drop there, I'll make a little bit of premium. If it happens to drop there, I'll take the stock plus my credit. So a lot of people get excited about that. However, when it falls to 35 and all of a sudden you're about to get assigned, usually that's when people go, oh man, I don't think I like it at 35 anymore. So if that's what you're saying and you're cool with that, then yeah, absolutely. Boeing is an example. Looks like people were talking about there. Yeah. Annie says, would it be a good idea to sell my up stocks and buy more on the negative stocks to balance out? If you find that you are outside of whatever your target allocation is, that's a very common thing that people have had to do this year. If you have, like, for lack of anything else that I can focus on at the moment, if you had, say, 50% NASDAQ, 50% Russell 2000, and the NASDAQ's screaming ahead here, Russell 2000's doing good, all of a sudden you find that you're at 56% NASDAQ and you need to rebalance, I could understand that. A little trickier when you get down to individual stocks because you don't want to become too correlated to an individual sector or to a particular index. If you can avoid that, that'd be my opinion. John's got a nice compliment there. Thank you. I appreciate that. Hey, Dustin, how does the Secure Act impact retirement and estate planning from your perspective? Some pros and cons. I really worry about the annuity exception in there. So now in your 401k, when you get a list of investments, you're also going to get annuities. I really worry that people are going to fall into those and then be very frustrated. I have yet to encounter one customer who has said, I have an annuity, I'm happy with it, I just want to do something else. Everybody, right? Annuities are really supposed to be focused on a tiny, tiny little part of the population. But I worry that in the 401ks now, people are just going to say, that's awesome. I get a payout, I get a consistent payout, and I'm worried about the market. I'll go with that. What happens 2 years later? You go, I want to change my mind. It's going to cost you. So I worry about that. I like the RMD increase to 72. That's awesome. I'll take that. I like how they are letting smaller employers work with larger larger 401k plans. You're going to see a lot of commercials and stuff about that, a lot more advertising for that. So happy with that. The annuities thing, that kind of bugs me there. There's also a small incentive if you just auto-enroll your employees into 401ks. I don't know. Maybe that's good for people. I don't know. I'm a big fan of the auto-enroll feature. The problem is some people don't don't want to do that. It's filing statuses, other plans that they may have. It's nice for the employer to get things like a $500 credit, so that's fine, but we'll see. You're expecting a big sell-off in the first week of January, starting from next week and a profit taking there. I think a lot of people are expecting that. Yep, at least an increase in volatility. Yep. You guys are talking to each other there, I see. You read about the tickers under $1 in the New York Stock Exchange and how these companies have to hire market makers to keep the price above $1. Opinions on swing trading them. Well, there's no actual rule that is favorable, of course, and there are different deals you can make with the said market makers, but there's no actual rule that has to stay the case. So if you're saying, well, if a stock falls to 93 cents, could I bet on it going back to $1? I don't think you're going to find that very successful. But just my opinion. Just my opinion. I know a lot of people that trade those cheaper stocks there. You can, just like anything else, if you traded Netflix every single day, for some reason, you pick Netflix, you could get really good at it. You get to know the personality of Netflix. Believe it or not, all these stocks are all like little pets, right? They all have little personalities. You can pick up on it pretty quick. So I'm all for like sort of focusing in on an area, a price range, a volume range, a volatility range or something, and having a little group of stocks you specialize in if you're an active trader. I don't know that $1 stock would be the way to go. That probably wouldn't work for me. What do you think of Shopify? Back to highs today, right? Shopify. Yeah, Shopify went back to highs today. Rather pricey stock. Remember, this is a trading stock because of the way that they went public and how you actually don't really control anything if you want to pretend to be like an owner of the company. Not really that type of stock, but looks strong in the short term here. Yeah, quick recovery from those previous highs. Yeah. I love it. Yeah, I worry about those insurance. I worry about the annuities there. Hey, Jazz man, what's your opinion on SPY, taxable account investment as value investing seems to go? It's hard to find versus growth. You asking about what using the SPY just to use as an index ETF in an account? I don't have a problem with it. Low dividend, not really much to consider there. That's fine. I would maybe suggest weighing them against the other indices to see if something better fits your growth profile, right? Everybody defaults to the S&P. Is that really the best? Or is there something else that fits you a little bit better? One of the other indices, do they perform a little bit better? I did a class for that for customers, I think, one time. We went through each index to see, like, if you had to pick one, which would be the best one, long term? Just looking, would it be better to go with the S&P or what? But could you? Yeah, sure. Of the first 2 trading days of the new year, which one's more likely to be an update? That's a good question. I won't pretend to know the answer to that question. I know the first 2 trading days of the year rank sequentially as the most volatile days of the year. So I know some of you are just dying for the new year to come along here, maybe see a little volatility. I understand. How many times per year on average are there 0 52-week lows with respect? Oh my God, you guys are getting me into crazy studies. I love the suggestions, by the way, because a lot of times I just sit around, think of ideas, and then try to pull the data. I don't know, though. I don't pretend to know that one either. I love it. Tesla, yeah, well, they were a little higher today too, right? Tesla back over 430. Let's call it 431 today. It's just continuing its scream higher. Yeah, very extended in the short term there, but nobody seems to care. Nobody seems to care. Well, that's it. I think I'll wrap it up there. You're correct. There's no wine and wealth tonight. You guys enjoy your holiday week there. If you have questions, of course, I'm always happy to help. But that'll be where we'll wrap it up for the day. I appreciate all of you sitting around, watching with me, and taking time out of your holiday week there. Hope you have a great rest of your week. We'll be back tomorrow. We'll do this again tomorrow, and you enjoy. Thanks for watching. See you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.